Good afternoon and welcome to BizTech's Asian Midday Market Watch. Today we have Jessica Amir, market strategist at Saxo Capital Markets, as our guest today. Now, Jessica, great to have you on the show.
Great to see you as always, Brian.
Now, Jess, I'm going to come back to you soon after we take a look at cryptocurrencies and also where regional stock markets are. We're going to start with the crypto market, which has bounced back significantly. Bitcoin is at just over 20,000 at 20,044.5. It's up 6.53%. Ethereum is at 1,381.85. It's up 6.71%. Now, looking across the regional stock markets, the Straits Times Index out of Singapore is down 0.57%. Bursa Malaysia is up 0.1%. Shanghai is up 0.22%. ASX All Ordinaries is up 0.24%. The Nikkei is up 0.48%. The Hang Seng is in negative territory. It's down 1.02%. And rounding up the numbers, we've got the Kospi, which is down 0.66%. So, Jess, what's your view on how markets have performed in the first half of the day?
Well, we are seeing a lot of dip buying take place. We saw markets sell off quite heavily yesterday on the back of the US dollar rising to 20-year highs. But we're seeing a bit of a stall moment for the US dollar, and this is potentially giving rise to a further rally up. Indeed, a rally up from markets just hitting 2022 lows overnight in the US. So we are potentially waiting for a big pivotal moment, a short-term relief rally on offer ahead.
Okay, so short-term relief rally, but do you see any sustained rally beyond that? Or are there too many dark clouds now globally?
Yeah, look, unfortunately, the medium and the medium-term headwinds are still quite significant. So we do have bond yields rising. The US dollar is still quite high. It is remaining supported at 20-year highs. And we do have financial conditions and valuations being tightened as well. And then, of course, we've got US earnings season about to kick off as well. We're thinking that we're probably going to see more downsides ahead, Brian, and then waiting to see potentially the dust settle there. But overall, equities are remaining pressured on the growth side of the market. As for long-term sustained upside, the most upside we think will be in energy, and we think that energy is potentially showing signs of a rally coming into play here. We think the market will probably return to the basics, the fundamentals, and we still have short supply in 2023. And if you look at the technicals, Brian, for most energy commodities, they are in oversold territory. So looking promising for a rally up in energy, and all in all, a broader sell-off likely to continue over the long term, but a potential relief rally in sight for the tech and growth space.
Okay, now, how are sophisticated investors insuring themselves against further market sell-offs?
Well, a couple of ways. Interestingly, at Saxo, what we've seen of late is an increasing amount of clients actually buy put options, which is essentially a insurance policy for protection against downside. It's not just at Saxo, Brian, that we've been seeing this, but across the industry. If you look at a US recent finding, there was about $10 billion spent in the past 2 weeks on insurance options, i.e. people buying puts to protect against further downside. So this is really telling us our overall thinking is correct, and the overall landscape is quite bearish, with the Federal Reserve still continuing to tighten its belt. So we are thinking that there is further sell-offs ahead, and insurance policies are a great way to get upside when markets go south.
Now, one of the areas which I think investors are looking at, obviously, is bonds. And interestingly enough, one of the things that you've highlighted is the attractiveness of Australian bonds versus US bonds. Could you give us some insights into Australian bonds then?
Yeah, it's a really good question and really topical at the moment because Australian bond sales have just hit a record. So far in 2022, bond sales are up in the order of about $73 billion, quite astronomical. And the reason that bond sales are gaining a lot of interest or investors are actually buying into bonds is because they offer a higher reward, a higher yield than US. So today, the Australian 10-year bond hit about 4.1%, not about, exactly 4.1%. That's the Aussie 10-year bond. That's more attractive than the US S&P 500, than the Dow Jones, and also the Nasdaq's average yield. And then plus, adding on top of that, Brian, we've got a cheaper Aussie dollar. So the Aussie dollar is down in the doldrums. So it makes it favourable for foreign investors to indeed invest in Australia. It's a good return and it's at a cheaper price because the Aussie dollar is at low. So we're thinking that this momentum will probably continue because the US dollar is supported to the upside while the Fed is continuing to tighten, while the Aussie dollar is remaining pressured because commodity demand is still pretty weak while China's in lockdown. So that's something to consider.
Now, Jessica, final question. About 2 hours ago, the World Bank released its predictions for its growth forecast for 2022, and it has slashed growth forecast for East Asia and the Pacific region to 3.2% from its April prediction of 5%. What's the view at Saxo in terms of economic conditions going forward and as things deteriorate?
Well, the big R word is coming into play, and this is not the only large bank of scale to downgrade global growth. So we've seen other global growth downgrades really hit the market of late. We are expecting this to continue, and indeed perhaps a look at the UK, just what they've done over the last several days. So we are expecting economies to be downgraded and also global growth. But our thinking is quite bearish, purely because we do have the US dollar at cripplingly high levels. And this means that some global economies will actually tip into recession at an unprecedented level. So we are potentially toying with this idea here, and this is exactly why markets or market participants, sophisticated investors, are indeed buying protection for downside because there is a huge risk now with the US dollar continuing to run up. A recession is more likely than it was several months ago.
Now, Jessica, thank you very much for coming in and thanks for your insights.
Thank you so much, Brian. Have a great afternoon.
Now, we've been speaking to Jessica Amir, market strategist at Saxo Capital Markets. I'm Brian Fernandez on BizTech's Midday Market Watch. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks again for tuning in.